If you're looking for those unique tax deductions to help boost your tax return this tax time, I'm here to help. As a tax agent that's working with nearly 1,000 taxpayers every year, I've definitely seen my fair share of unique tax deductions. Here are 7 of my favourite. The first one is laundry costs. So a lot of people are aware that they can claim laundry costs, but what they're not aware of, they can actually claim this even if their employer pays for their work uniform. So we still have to have the same rules when it comes to what's claimable when it comes to uniform. So it still needs to be either be compulsory uniform, a registered non-compulsory uniform, occupation specific, or protective clothing. But if it ticks one of those boxes, even if your employer has paid for it, if you are required to wash it, you may be able to claim laundry costs. Now, laundry costs can be claimed under 2 different rates. So we can claim $1 per load if we are just washing those above items, so if we're just washing our uniform, or we can claim 50 cents per load if we're washing it mixed with other clothing. One of the key things when you're doing this is don't just go and claim 5 loads per week for 52 weeks of the year. You need to make sure that you're adjusting for time that you've had off during the year, such as annual leave and public holidays. The second one is sun protection. You may be able to claim costs relating to sun protection, such as sunscreen, sun hats, or even sunglasses. Now, there are 2 things that you need to tick off to ensure that you can actually claim under this. So your work needs to expose you to the effects of the sun because you're required to perform your duties for prolonged periods outdoors, and you wear these items while you're at work to protect you from that risk. So if you tick both of those options, you may be able to claim for these items. Now, the key thing is if you're claiming a pair of sunnies, you need to adjust for a private use portion if you're using them outside of work. This is something the ATO would definitely look at depending on the cost of the sunnies, the type of the sunnies, and whether they think this is something you'd be wearing outside of your workplace. The third one is tax software. A lot of people are aware that they can claim, say, the fees they pay to their agent, but sometimes they forget that they can also claim fees for software they've used to help them prepare their tax return. So a common example of this might be, say, you've used Crypto Tax Calculator for your crypto software, which you can find a link to that down in the description of this video, where you can actually get 20% off. Or something like ShareSite, where you can put in your share activity and you can produce reports that will show your dividends and your capital gains events. This is software I use for my personal tax affairs, and you'll find a link in the description of this video where you can actually get a discount on an annual subscription. And if you actually only got less than 10 holdings, the subscription's actually free. But if you are paying for this cost, so you're using something like these softwares I've just talked about to help you prepare your tax affairs, then the fees are likely going to be tax deductible to you. Now, before I get into the 4th item, something else that you can do to help you understand tax better is to join my free email newsletter. The link is in the description to this video. Each week I drop different tax tips to help you better understand your taxes and better make sure that you're optimizing your overall tax position. I'd love for you to join it. As I said, the link is in the description of this video. Now let's move on to the 4th one, and it's income protection insurance. Now the key with this, you need to have paid your income protection insurance outside of super. So if you have income protection insurance within super, you can't claim a tax deduction for that. However, if you paid it outside of super, you may be eligible to claim a tax deduction. Now the key is this insurance needs to be related to protecting your income. So it means you can't claim items such as life insurance or TPD insurance. It needs to be income protection insurance. But this one can be quite a hefty cost, and therefore you want to make sure it's tax deductible to yourself. So go and check. Normally these places will actually send out a letter at the end of the year that shows you how much of your premiums you paid were related to income protection purposes. So then you can pass that on to your tax agent or include that when you're doing your tax return. This may be something that you do factor into your decision making when you're considering whether you hold your income protection insurance outside of super or within super. Again, there's a lot more factors when it comes to that, but that is just one of the considerations you may make. The 5th one is union fees. If you pay union fees as a part of your employment, then it may be tax deductible to you. So obviously this union would need to relate to your employment. So if you're working in a particular industry where they offer a union and you join that, and that's going to help you protect your working rights, then it is likely going to be tax deductible to you. And this is one sometimes people forget, or they forget to check the amount. So be careful of this because the costs likely go up over time. So don't just claim the same as what you claimed last year. Make sure you recheck. Again, your union should actually send you out a letter at the end of the year to show you how much you've actually paid over that time period. But if you haven't got that, go back and check your documentation, check your bank statements to see what you're actually paying. Quite often these things are on an ongoing basis, whether they're fortnightly or monthly. So go back and check how much you're actually paying. This is an area I'd say though, don't get sucked in just because of the tax benefits. Make sure you're joining the union because it's actually something you want to be a part of and you think it's going to benefit you. Because just remember, when you're claiming a tax deduction, you're only saving tax at your marginal tax rate, not the full amount that you paid. Now the 6th one might be a little bit controversial, people, of whether they believe it should be deductible or not. but it's donations to political parties. So you can claim if you make donations to a political party, or maybe you've got a subscription or membership to that political party. Now, it needs to be a genuine donation for it to be a deduction, so it can't be something where you've got something in return. Now, there are caps on this, so you can do up to $1,500 for contributions and gifts to political parties, and up to $1,500 for contributions and gifts to independent candidates or members. So this is something to be aware of. There are caps on this, but it is something that if you're involved in this scene and you are putting your money out there to donate to these people, it may be tax deductible, so remember to include it in your tax return. And the seventh one is performance tools. Now, this one's going to be very unique depending on what type of industry you're working in. So maybe you're a dancer that requires some kind of unique parts to your outfit, or maybe some kind of props that you've had to pay for out of your own pocket, then this may be deductible. Maybe you're a musician that has to buy equipment such as musical instruments for their performances, and therefore it may be tax deductible to you. Be careful on some of these tooling items that may be over $300 because they may be depreciated over a number of years rather than claimed in full. The other key catch to this is you can't claim if your employer has reimbursed you. So if you're a musician and you go out and buy something, but your employer then gives you the money back for that, you can't then claim that in your tax return because you weren't in the long run the person that actually paid for it because someone has reimbursed you for it. Now, if you're watching this video in July, chances are you're probably thinking about your 2024 tax return. And in this upcoming video, I go through some of the key changes that are impacting individuals when they do their tax return. I'd love for you to go and check that one out, and I appreciate you watching this one.